Hello, this is Ronnie. I'm back here with a clip taken from a long video that I just finished to record for my subscribers. I want to make a short announcement here. I usually post the clip on Saturdays, but I'm going to be traveling in the next 3 weeks, and I will not be able to post as I usually do on Saturdays. But I will continue to follow the market and record whenever I get a chance. So I will post on my channel. It's not going to be Saturday. It's probably going to be a weekday. So please pay attention. I will keep you updated as much as I can while I'm on holiday. And when I'm back, I will revert back to the usual pattern, yes, posting on Saturday. I really appreciate your support and your interest. I see that now I have more than 1,500 followers. That's very interesting, and thank you very much. I hope you enjoyed the clip that I present this week. Wish you have good week, good trading. Bye now. Here's gold. Now that's the daily of gold. The fact that it continued almost in a breathless rally, almost to the other side of this trading range, is very positive. Yes, it has now, in my opinion, flipped the odds. It flipped the odds to the upside, to the extent that now it looks like this level right here is definitely under threat. And if you remember the wave count that I used here, and I had a different one that I presented in the case of silver, but the wave count that I presented here concerning gold on the daily, we had this as an A, okay, the big stretch here, and then we had this as an ABC. This is unlikely to change under any scenario, yeah, under any scenario that I can think of at this point. That is an ABC. Okay, the question is really what's happening here. And one idea was that we'll take the ABC here as an A, we'll have an ABC here that will be a B, and then you have C, D, E, like that. Now the fact that this week it ran up in a straight line almost, that is telling us that it is very likely to go above this line. Once it goes above this line, it kills there, if you like, the textbook shaped triangle that we put here as an A, B, C, D, E. Why? Well, it's pretty simple, because if it runs above this level, you don't have, it's just not there. This pattern that I had in mind is not there anymore. You're going to see immediately what I mean when we look at the 60 minutes. Now look, there are a few options operating here. It really depends what it's going to do very short term. I'm talking about the next 48 trading hours. Okay, if it stays at a relatively elevated level, and quite a few charts are indicating that this is likely. Look at GLD. GLD is basically going sideways, lateral movement, which is very supportive of further price action. That is often the indication. But suppose I'm wrong, and suppose it's going to go down, as I'm showing you here, an alternative with this being an A, that's a B. It's going to go down in a C, and the C could go, let's say, even down towards 1,228, up to this level. By the way, if it breaks this level, this line that you see here, on a close basis, I would imagine that it's heading lower for whatever reason. Okay, maybe I missed something. It's heading lower. I think this support here must hold if the bull is still around, okay, even short term. Now let's take the case that we are still in that triangle, and that is indeed the end of the ABC. I'll just have to expand it a bit so you still have the entire pattern in mind. You see, imagine that this is you C, okay, that's you C, that's you B, that's you B, that's you C. And in fact, what happened here, we'll go with the alternative that will say 1, 2, 3, 4, 5 in blue. we have 5 wave run that began from here. So inevitably that's going to be your A, and if you have an ABC going all the way down here, that's going to be your B. But then when you get your C, unless it's a C failure, the C that has to relate, and suppose it starts from here, has to relate to all of that, that is going to take it way above this line. You see what I mean? That's why I think the odds flipped. The odds look like they are now with the bulls. The odds look like they are with the bulls, and there could be quite likely a breakout above this level. Now we put aside, although we are not supposed to do that, but this is this analysis that I just presented to you is purely based on the chart, what you see right here. Yes, I didn't put in other markets into consideration, but you surely need to do that before you put on a trade, or if you analyze and you like to prepare you trading, or to let's say check if everything is still on track. You are invested, you want to see if the things are still working. Now you have to put in, of course, the dollar index. You must look at what the dollar index is doing. We have seen serious weakness in the dollar index in the last few weeks, and it is scheduled to continue. The way I see things, it's likely to continue for quite some time. So this is supportive of gold continuing up. Now let's focus on the very short term in gold and see the other alternative. That's the half an hour scale, and the other alternative is as follows. That's a 1 2. You run up here, you have a 1 2 3 4 5. That's 1, it's not 3. That's 1, that's 2, that's 3. And now we're in a situation that could yield a fourth wave on the red scale. I have presented here a case. Let's go now to the 5 minutes so you see it really clear. You see I presented this as an A, that's being an A, B, C, and the big drop towards the close on Friday is going to be a C like that. So it's going to just deep under this level right here, under 1240.9 or so. Okay, it's going to deep, and that's going to give you the A, B, C. Now I imagine that that could be probably just part of the fourth wave, or perhaps the entire fourth wave. And as soon as it bounces back towards mid-range, towards 1248 or so, you know that everything is on track. For the bulls, everything is on track. It is likely to continue high, and it's going to run above this level. In over, I would say, 2-3 trading days, I'm back to the 60 minutes. The price action, as it evolves here, will help us to sort out and see which really is the right wave count to use at this point. Okay. Now here's silver. Silver is showing here on the daily the alternative wave count that I presented with taking the big stretch here right from the historical bottom that we have seen here. That is taken as A01, that's B02. Okay, and the alternative that I discussed last week, that being 1, potentially that's 2, that calls for silver just continue up. Okay, up. That's what we want to see from silver, and well, for now, that's what we have been seeing. This past week, silver has not failed to look up, but it's been the slow goer. It's gold that has been leading the way, and silver has followed, but as you can see, gold proportionately on its chart is around here. You surely remember that. Where silver is still knocking its head against another level of resistance here. It was held down for quite some time around here, you can see, and we got this nice run. On the short term, we can make a case that we are in a 1 2 3 probably done. We're going to go sideways and then continue up in that fifth leg. The alternative would say we are basically in an ABC, and that of course will be negative. We are going to go to the 60 minutes, and you will see the levels that will play an important role here in the development of the price action for silver right here. So we must start counting from here, and I hope you know why. Yes, we don't really have a choice, and you can see the spike bottom. In the case of gold, we started from here because we didn't have this spike bottom, and that was the really dead bottom. Okay, silver doesn't give us this choice. We start from here. We have 1, we have 2, we run up, we have 1, 2, we have 3, we have 4, likely coming towards the end of that fifth leg, and then we should see price action that will be confined to a tight zone. That's the ideal situation. We do not want to see silver going back to 1745. Going back to 1745 will require reassessment of the wave count. Might turn out to suggest indeed that we have to use the ABC like that. That will be bearish. Silver will definitely turn bearish in my opinion if it breaks the floor here. After the big struggle to get out of this, yes, to release itself from the overhead resistance that we have here, to come back and actually sink and close under 17.22 right here, that will be negative. Yes, in my mind that will be negative, and silver could be heading lower. But at this point in time, I do not see this coming. Now, this is GDX. That's the ETF that is well known to all those who are invested in the precious metals, following the precious metals. I told you that this is relatively simplified wave count, okay. On the daily it shows us the big surge taken as 1, that's 2, this is another 1, that's 2. So the idea is we are going to climb and climb and climb. Yes, let's have a look at the 60 minutes and see what it's telling us. Right now, right from the bottom here are the two alternatives that I see. We had 1, 2, we had 3, 4 potentially ending here, and that's your fifth. You see, I'm not terribly sure, that's why you see the question marks. It is quite possible that in fact what is taking place is a triangle. This is the fourth wave triangle that relates to the 1, 2 here. That's perfectly possible. It doesn't look very odd, especially if it's going to be resolved fairly soon. Okay, what I mean is that. Okay, now that will be very positive. Yes, if this is the right wave count, even though it is not going to run up immediately, that will be quite positive because that will be first leg up. You have 5 legs, correction, and then expect further surge. That will be definitely positive. Let's go to the 4 hours chart and see what we are seeing there. Here we go. That is the 4 hours chart with the first leg potentially ending here. Okay, so that's your 1, 2, and here's the climb. 1, 2, suppose you have a 3, 4, 5, spending a bit of time here and then shooting high. It's going to break about 25.50. The potential is certainly there to run above this level, also given the context in which we are operating currently. The context is that the dollar index is still very weak, so I would imagine that there is good chance this is going to continue higher.